Hello, friends, and today we have part two series, second session on GST in Unleash Your Potential. And we believe that we can cater you in the best way by providing the case study based learning, how to grow your practice, come back in the practice, and either from break or from job. And this series will be expanding your horizons and support you in developing all your arenas and fulfilling your wishes and achieving your goal. And today we have with us very eminent faculty. Today we have with us very eminent faculty, CA Viral. Am I audible?
Yes, ma'am.
And Viral is from Chennai, and I have heard her at Mumbai, and I was really very impressed with the deliberations and the knowledge at very young age on GST what she has. So then we at that time only I told her, "Ki, why don't you come in our national programs to share your valuable knowledge and experience?" So, on behalf of Women and Young Members Excellence Committee, Viral, we welcome you over here in this series on Unleash Your Potential. And we have with us very two eminent moderators also, C.A. Shweta Panelia, and she is from Surat and contributing a lot for the activities of the institute, specifically women members programs. So, and we have with us, she is Sonia, and she's from Punjab. So, and she is also very much enthusiastic, and both are in our committee in WYMEC. And we have a lot of plans and projects to carry out. And very soon we are planning a meeting also. So, friends, if you have any suggestions for our Women and Young Members Excellence Committee, please forward to us. Feel free, and whatever support required from our side for our fraternity will always be there. With these few words, I request our moderators to take the session further. And I am sure that this session will add you a great knowledge to all of you. And friends, wish you a very happy learning.
Thank you so much, ma'am, for your kind words. And I really salute the spirit of the, I must say, versatile, passionate, and the polite chairperson of this committee, Priti ma'am, for coming up with this wonderful initiative. Ma'am, you are a true inspiration for all the female and blessed to be in your committee, I must say. And now for today, we are going to cover very stimulating and practical aspect of GST. That is the registration and valuation under GST. And for today, we are having with us, fortunate to have with us, CA Viral Kinda. She is a fellow member of the ICI. Her first stint as a professional was a regional credit manager at a leading MNC for more than 3 years. Her affinity to be associated with law, taxes, accounting, and consulting made her renounce the job and join Sanjeev Shah and Associates, a leading CA firm in Chennai. Now, here she had been involved with the core of GST analysis as an associate in direct taxes for more than 3 years and is now a partner. She has been addressed various private clients on the basis of GST in the past and also helped them in implementing GST in their organization. Some of her assignments include undertaking complex classification issues, transaction analysis to understand GST implications, retainership support, and also policy advocacy with the government. She's a trainer for the officers of the Commercial Taxes Department too. She has been a faculty for the certificate course held by the GST and IDT Committee of ICI, addressing certain core areas of indirect tax. She has contributed to the prestigious ICI journal and also contributed to many publications on GST by the ICI. So let's welcome a lady who is a perfect blend of professional excellence with a humble attitude of Viral Kintar.
Thank you so much, Sonia Madam. My greetings to the very dynamic chairperson of the WIMAC committee and the other office bearers of this committee. I would now get into uh, the deliberations on the topics which have been allocated to me. So I'll just share my screen, and I hope you'll be able to see the presentation. Is that visible?
Yeah, ma'am.
Yes. So yes, this wonderful series started by the Women and Young Members Excellence Committee. I really liked the way it has been titled, which is saying "Unleash Your Potential." I mean, it is so apt for women like us who find it great, who have a lot of difficulties, who have to cross over so many barriers to actually realize our full potential. So, to all the women who have logged in and are waiting to come back to this profession and come back in touch with the subject, I assure you that with your determination and hard work and with your dedication, you'll be definitely able to come back to practice, come back to your profession. So I'm here to guide you on certain important aspects of the GST law, especially, and the way the GST law has been so dynamic, where we are having changes almost each and every day. It becomes difficult for a person who's not fully in practice or fully in touch with the subject to keep a track of whatever changes are happening. So today I will be presenting on how we should go about registration, how you should value a supply, how do you go about raising documents under the GST, what are the important documents that need to be raised, and also the latest technology which has been introduced into the GST, which is e-invoicing. So I will take you through all these topics today. So we begin now with how one should register for GST. In this, I will be sharing with you what are the provisions of GST, what are the threshold limits, what are the legal other provisions which are there, and also how you should go about registering by taking you through the interface on the GST portal. Now, when you come to registration, it becomes very important because whenever any tax has to be collected or any compliance has to be done with the tax law, the first step would be is to take registration. The provisions of registration are contained in Chapter 6 of the CGST law, which is bearing sections 22 to sections 30. And this registration gives the power for a taxable person to collect taxes under the GST regime. Because without registration, no one is authorized to collect taxes. In GST, there is a peculiar registration provision. Unlike in the erstwhile indirect taxes regime, there used to be the concept of centralized registration. It was there in the earlier service tax laws, and VAT, again being state specific, was applicable only for those particular states where the operations were carried out. So when you come to GST, the concept of registration becomes a slightly complicated because they say that registration has to be taken in each and every state from where the business or whether from where the supply is being taken. So with this registration, it is not a single registration which a taxable person can take for the whole country. From wherever such a taxable person is making a supply, in all those states or union territories, the registration needs to be taken. So we need to be very careful of checking what is the turnover limits, as well as also looking at what are the places of business from where the particular assessee is operating. Without collection, without registration, as I said, no one can collect taxes. And in GST, registration is PAN based. That is, based on your PAN card, you're going to be allotted registration numbers. And further, the advantage of getting registered is that the person can take the benefit of input tax credit. The input tax credit, which is the heart and soul of the GST law, and in fact, one was the main reason why the GST law was brought into was that there can be a seamless flow of credit from all different types of taxes being subsumed into a single law. So once a person is registered, They have they have to collect taxes wherever applicable, and at the same time, even input tax credit as wherever possible, they can claim the credit of those and set it off against their liabilities. So unless and until a person is not registered, they will not be able to take advantage of the input tax credit. So the topics which I'll be covering today is from a taxable person, who is supposed to be considered as a taxable person, when is a registration to be taken, what are the threshold limits, where all do you need to take registrations, that is, what is considered as a place of business, then what is the procedure for registration. And there are certain scenarios where they say even irrespective of the threshold limit, you still need to go and take registration. That is covered under compulsory registration under section 24. Then there's a concept of deemed registration. And once registration is taken, by any chance, if the registration is cancelled, what is the modus operandi to be followed to get your registration activated? And how do you go about filing a revocation of cancellation? So these are the topics which I will be deliberating today for this first half. So a taxable person is defined in 2107. It says a person who is registered or liable to be registered under section 22 or 24 will be considered as a taxable person. And that taxable person, depending upon his threshold limits, will be liable for registration under the GST law. So a person who's registered or liable to be registered. So this includes even cases where a taxable person takes registration on a voluntary basis. So there are chances, there are provisions available in the GST law. Maybe my turnover has not crossed the threshold limits. Maybe I'm not even compulsorily required to register under the GST law, but I would still like to register under the GST law. Then also I have the option available of taking a voluntary registration under the GST law. The only thing is, when I apply for registration, in the reasons for obtaining registration, I need to specifically mention over there saying that I'm taking a voluntary registration. Now, who are the persons liable for registration? That is given under section 22. Section 22 reads as below. Every supplier of goods or services or both is required to obtain registration in the state or union territory from where he makes a taxable supply if his aggregate turnover exceeds. So in the state or union territory from where he makes a taxable supply, if his aggregate turnover exceeds 20 lakhs or 10 lakhs. Now, these are the two important limits which are given under the GST regime, which says that if the turnover exceeds 20 lakhs, then there is a requirement for registration. If the turnover exceeds 10 lakh rupees, then also there is a requirement for registration. So when do you follow these limits? This limit of 20 lakh rupees is applicable in all states except certain special category states. These special category states are given under the Constitution Article 274G. But in the section 22, special category states refer only to these four states. That is Nagaland, Tripura, Mizoram, and Manipur. So if a taxable person is having businesses in these four states, then the limit of threshold is at 10 lakh rupees. If it is in any other states apart from these four states, then the taxable threshold limit is 20 lakh rupees. So if the aggregate turnover crosses 20 lakhs in a financial year, then I will take registration. And if in these four states, if it crosses 10 lakh rupees, then I need to obtain registration. The government also has powers to modify these limits depending upon whatever request they receive from certain states. They have the power to modify these 20 lakh limit to 40 lakh rupees and this 10 lakh limit to 20 lakh rupees. So through this provision, which is giving the power to the government, there has been a notification which has been issued, which is notification number 10/2019, where they say that the taxable, the threshold limit is 40 lakh rupees if the person is engaged in exclusive supply of goods only. So now there are three threshold limits given under the GST law. 20 lakhs if it is other than special category states, 10 lakh rupees if it is special category states, which are only those four for the purposes of GST. And then there is a one more limit, which is known as the 40 lakh limit, which is the increased threshold limit. And that is applicable only if the registered person is engaged in exclusive supply of goods only. So he can either be a manufacturer or a trader, but there cannot be any sort of service which he can supply. It is only exclusive supply of goods. Then he can take the benefit of the increased threshold limit, which is 40 lakh rupees. There are certain exceptions to this. So who cannot use this benefit of 40 lakh rupees? Those exceptions are that a person who is required to take compulsory registration. We will see in detail what are the scenarios where compulsory registration will be applicable. In those cases, a person will not be able to take this benefit of 40 lakh rupees. They will have to stick to either 20 lakh rupees or the 10 lakh rupees limit. Persons engaged in making supplies of ice cream, pan masala, fly ash bricks, tobacco, building bricks, earthen or roofing tiles. If the item which is being supplied, the goods which is being supplied are these pertain to these categories, then the limit of 40 lakh rupees cannot be utilized by them. Persons engaged in making intrastate supplies in the state of Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Puducherry, Sikkim, Telangana, Tripura, Uttarakhand. So there is another special category states which have been given only for the purposes of this notification. So if a person is belonging to these particular states as given in the screen before you, then the 40 lakh rupees limit cannot be used by them. They will have to stick to either 20 or 10 lakh rupees only. Persons taking voluntary registration. So like I said, if I'm interested, I can take registration on my own, even if my turnover is not crossing, even if the law does not mandate me for me to take registration. In such scenarios, I cannot take the benefit of this 40 lakh rupees. The day I get registered under voluntary registration, the each and every amount which I earn will be liable to GST. So now there are certain states which are having different threshold limits. So we have to be very, very careful when we advise our clients on how to decide upon the limits which are applicable for registration. It is not based that where the head office is going to be located, I will look at the threshold limit applicable only over there. I have to see for each and every state from where the particular client is going to be operating, I will have to test for these threshold limits. So to briefly summarize this, whatever provisions of the registration we have seen, states, union territories with threshold limit of only 10 lakh rupees for goods or services or both are only these four states. So once I belong to Manipur, Nagaland, Tripura, or Mizoram, I will not be able to take the benefit of 20 lakh rupees or even the 40 lakh rupees limit. Now coming to states, union territories with threshold limit of 20 lakh rupees for goods or services or both. Those are the 6 states which are being specified over here. Then states or union territories with threshold limit of 20 lakhs for goods or services and rupees 40 lakhs is all other states or union territories. Now there can be a scenario where your particular client or a particular assessee is having multi-state operations and they belong to even the northeastern states as well as to the northern or the southern states part of our country. So in such scenarios, we have to be very, very careful to decide what will be the threshold limit. So say, for example, there is a office, the taxable person is having operations in Tamil Nadu as well as in Manipur. In such scenarios, if you see if the operations had to be only in Tamil Nadu, and say it is only an exclusive supply of goods, there are no services involved, in those scenarios, the threshold limit would have been 40 lakh rupees. But now, since that particular person is also having a branch, is also having making taxable supplies in the state of, say, Manipur or Nagaland, Tripura or Mizoram, the threshold limit of 40 lakh rupees, which was otherwise available, now gets reduced to 10 lakh rupees because that notification very clearly said if there are operations in any of these states, those persons will not be able to take the benefit of the increased threshold limit of 40 lakh rupees. So here, my threshold limit from 40 lakh rupees has been reduced now to 10 lakh rupees. So if the turnover in Tamil Nadu as well as in Manipur totaling together crosses 10 lakh rupees, then I need to take the registration. I will be mandated to take registration. So this 10 lakhs, 20 lakhs limit and the 40 lakh rupees limit has to be very, very carefully applied. So when I'm saying 10 lakh rupees, 20 lakh rupees, how do you determine that? They say that the aggregate turnover in a financial year should not cross those particular threshold limits. So now you have to decide what is to be taken into consideration for calculation of the 10 lakhs or the 20 lakh rupees limit. There is a definition given, which is the definition of aggregate turnover. And in fact, aggregate turnover has a very, very important role to play in GST because any such applicability of the provisions of the law is being decided on the basis of this aggregate turnover. So here aggregate turnover means the aggregate value of all taxable supplies, including exempt supplies, exports, and interstate supplies between persons having the same PAN. So it is not that only wherever there is a tax payable, I will consider that as part of my turnover. Even if I'm having a FD interest, a bank FD interest, if I'm having some rental income, if I've earned some discounts, all this, depending upon the facts and circumstances, will be taken into consideration for calculation of the aggregate turnover limit. So to summarize briefly, aggregate turnover includes taxable supplies, exempt supplies, exports, interstate supplies between the branches of the same entity, and inward supplies on which tax is payable under reverse charge is excluded. Any other taxes are also excluded, and Schedule 3 items are not to be considered for aggregate turnover. Schedule 3 to the CGST Act or even the State Act gives the list of supplies or activities which are not to be considered as a supply. For example, the supply between an employee and an employer, for which salary is the consideration. Those kind of transactions will not be considered as a supply and hence will not be taken into calculation of the aggregate turnover. So if I am an employee and I have salary income of say 15 lakh rupees, and I'm also having some bank interest as well as a rental income, which totals and crosses to 25 lakh rupees. It does not mean that I need to register under the GST law because salary of 15 lakh rupees will not be taken into consideration for calculation of my aggregate turnover. So excluding that, I have only 10 lakh rupees limit, and depending upon which state I belong to, from where I'm making the taxable supply, that will determine whether I need to register under the GST law or not. So that is why Schedule 3 items will not be taken into consideration for calculation of aggregate turnover. So what is 10 lakh? It's not that you just take your profit and loss account and see what is on the credit side pertaining to the revenue from operations or the revenue from sale of goods. That alone need not be considered. Even exempt supplies, supplies on which tax needs to be paid under reverse charge, all that also need to be taken into account for calculation of the aggregate turnover. And there is one important aspect here, which says that interstate supplies to branches of the same entity, that also needs to be taken into consideration for calculation of your aggregate turnover. So what do you mean by that? Under GST law, there is a concept of distinct persons. That is, if I have a branch, if I'm operating from Tamil Nadu, and I also have branches across other states, then whatever transactions happen between the two branches, that will also be taken into consideration for calculation of aggregate turnover. So if I am saying I manufacture goods in Chennai and I'm supplying them to Bangalore, where my branch is there, from which there's going to be further supplied to the end customers. In this case, when I supply or transfer my stock from Chennai to Bangalore, that will be considered as a supply. I have to charge GST on that. In the erstwhile laws, it used to be exempted under the cover of certain forms, but that concept is done away with in the GST regime. So even stock transfers, in fact, interstate stock transfers, need to be taken into consideration for aggregate turnover. It is as good as making a sale to a third person, which needs to be taken into consideration for calculations. So we talked about 10 lakh, 20 lakh, and 40 lakh being the aggregate turnover limit. Then I said that even from where the supply is being made in that particular state or union territory, the registration needs to be obtained. So now how do you decide from which all states is the supply being made? For that, you need to refer to the place of business definition. The place of business says that a place from where the business is ordinarily carried on and includes a warehouse, a godown, or any other place where a taxable person stores his goods or supplies or receives goods or services or both. So like GST, always it is being told that it is a destination-based tax. But when it comes to the registration provisions, it is more like an origin-based tax. Why? Because from where the supply is being made, from where the taxable supply is being made, registration needs to be obtained in those particular state. So from where the supply originates, that is where the registration needs to be obtained. So it is not that if I have only an office in a particular branch, then I need to, or I have manpower over there, I have employees over there, only then I need to take registration there. Even if I'm storing my goods in a particular state, from where it is being used for further supply, then that becomes my place of business. Because place of business definition includes a warehouse, a godown, or any such place where I store my goods. So in cases where the stock is being stored in different places, say for ease of transportation, so that the supply can be made very quickly, in those cases also, that person will have to obtain registration in those particular states of storing these particular goods. A place where a taxable person maintains his books of accounts, or a place where a taxable person is engaged in business through an agent, that will be also considered as a place of business. So we know now place of business is from where the supply is being made. And in those particular places of business, you need to check whether the 10, 20, or 40 lakh limit is going to be applicable. Then there is a concept of transfer of business. So not only when your aggregate turnover is crossing that you need to look at whether registration becomes mandatory or not. In a scenario where there is a transfer of business, in case of, say, death of the person, the death of the proprietor, where the legal heirs take over the business of the proprietor. In those cases also, when the business takeover happens, the date of such transfer or succession will be considered as a date on which the transferee is liable to take registration under the GST law. And even in cases of amalgamation or some demergers being ordered by the court, in those cases, when the registrar of companies issues a certificate of incorporation, from that day onwards, that particular person has to register. So this transfer of business has to be looked at irrespective of whatever is the threshold limit. If the transferor being the proprietor or being the actual company, if both of those cases are registered, and if it is being transferred for on cases of death or amalgamation or merger, then it has to, the transferee, that is the one who's taking over the business, needs to be registered irrespective of the turnover. Now we come to compulsory registration under section 24. So even if I do not cross my threshold limit, which is 10, 20, or 40 as the case may be, I still need to obtain registration. Now there are different kinds of categories of persons who have been notified for this for this compulsory registration provisions. Persons making any interstate taxable supplies. So just if I am based in Tamil Nadu and if I'm making any supplies from here, if the supplier is, say, if the recipient is located in some other state, then I need to charge IGST, not CGST, SGST. In that case, it will be considered as an interstate taxable supply. Once I am undertaking any interstate taxable supplies, then I mandatorily need to obtain registration. So this was quite harsh because even if my turnover limit was hardly 10 lakh rupees, but just because I have one or two customers who are located in other states, it became so that I needed to mandatorily register under the GST law. So there are certain exemptions also granted to say that registration will not be applicable in certain scenarios. So in case if I was a supplier of service, in those cases, and if I'm undertaking interstate taxable supply of services, then even if my turnover is less than 20 lakhs or 10 lakh rupees, I still do not need to take compulsorily registration. So say as an auditor, as a chartered accountant, if you're having a client in some other state, though your threshold limit was not crossing, it became so that because of section 24, you had to mandatorily register because you will be raising an IGST invoice. So to exempt you from such kind of requirements, there is an exemption given in case of persons who are engaged in taxable supply of services, but the turnover has not been crossing 20 lakh or 10 lakh rupees limit, then registration will not be taken, not required to be taken. But if I am a supplier of goods and still my turnover is below the threshold limit, and if I am undertaking any interstate taxable supplies, I will have to mandatorily register because the exemption is given only for service suppliers. Casual taxable persons making taxable supplies. So casual taxable persons are persons who temporarily obtain registration. So say for example, if I am based here in Tamil Nadu, if I'm having some kind of an exhibition or some event which I am undertaking in say in Bombay, in that case, since I might be making taxable supplies from the state of Bombay during the course of my exhibition, in that case, I become a casual taxable person in the state of Maharashtra, and I need to register over there for the number of days the event is going to be conducted. So in those cases, even though if my turnover is below 20 lakh rupees in Tamil Nadu, but just because I'm going and taking part in that exhibition in another state, I need to mandatorily register for those supplies which I'm going to take from Maharashtra. Persons who are required to pay tax under reverse charge. So they are mandatorily required to be registered. So this was also quite harsh, where initially there was a lot of confusion. Say, for example, I do not have taxable, I'm not crossing the taxable threshold limit, but I am taking the services of a goods transport agency because I need to get my goods transported and delivered to my customers. So that GTA service provider was raising invoices saying that I will be liable to pay tax under reverse charge basis because GTA service is under reverse charge under GST. It now so became that I need to register just to take care of paying the taxes on the GTA services which I had obtained. So if it is GTA services to unregistered individuals, there is an exemption given from registration. Similarly, there could be cases where I have taken some legal advice from a lawyer. Though my threshold limit was not crossing, but just because I took legal advice, the lawyer has raised an invoice to me saying that I need to pay tax on a reverse charge basis. In those cases also, since my turnover is less than the threshold limit, I need not pay tax on the reverse charge basis for the legal services provided. So you have to bear in mind and check whether there is any exemption given to such kind of transactions which otherwise would have been taxed under reverse charge basis. To look at that list of notifications or any list of exemptions, you need to refer to notification number 12/2017 under the CGST law. Persons who are required to pay tax under 9 subsection 5. So this is referring basically to the electronic commerce operators who are providing services of transportation, accommodation, or housekeeping. Those people are required to register under the GST law. Non-resident taxable persons making taxable supplies. Say, for example, an association based abroad is coming to India to conduct an event over here. It can be a conference, it can be a music show, or anything of that. In those cases, they will mandatorily have to register under the GST law in India and discharge tax. Persons are required to deduct tax under Section 51. So, irrespective of a person who is registered under the GST law, they will have to take a separate registration as a tax deductor under Section 51. So, this is applicable only mainly as of now to government departments, public sector undertakings, and other local authorities. because they need to comply with the TDS provisions under the GST law. So TDS under income tax is different. TDS under the GST law is different. Under the GST law, it is given under Section 51. So those persons who are mandated under Section 51, they will have to mandatorily register under the GST law, not as a normal taxable person, but as a tax deductor. So even if they do not have a PAN card, based on the TAN, that is a tax account number, they can take a registration. Persons who supply goods or services or both on behalf of other registered taxable persons, whether as an agent or otherwise, input service distributors, persons who supply goods or services other than those supplies under 9(5) through such electronic commerce operator who is required to collect tax at source under Section 52. So in the earlier slide, we had seen where transportation, accommodation, and those kind of services, the electronic commerce operator was mandated to take registration. Here, it can be seen that apart from those supplies which have been specified under 9(5), those persons who are supplying goods or services through an electronic commerce operator will also have to mandatorily take registration irrespective of their turnover. Say, for example, I'm a supplier and I have empaneled or listed myself on Amazon or Flipkart or any such electronic commerce portal. In those cases, even if my turnover has not crossed the threshold limit, I will have to register for the supply of goods which I undertake through this electronic commerce operator. An exemption has been given in case if I'm a supplier of service and if the aggregate turnover does not exceed 20 lakh or 10 lakh rupees. Say, for example, I'm a beauty service provider and I provide services through this electronic commerce app or some aggregator. In those cases, I will not be liable to register because I'm providing services and my turnover has not crossed the 20 lakh or the 10 lakh rupees limit. Every electronic commerce operator, OIDAR services. OIDAR is nothing but Online Information Database Access Retrieval System. Those service providers have to provide, if they're providing services to unregistered persons in India, they have to take mandatory registration. A simple example could be, say, your subscription with Apple or Android. So these people are basically allowing you to have free downloads of apps or music content or any such kind of digital media. In those cases, the persons like Apple and Android, they need to take registration in India because they're providing services to unregistered persons. So what happens in the case if they have registered persons? In those cases, if I am a registered person and if I am taking such kind of a subscription, then I will have to pay tax under reverse charge basis. So in case if it is not taxed under reverse charge, then the OIDAR service provider has to come to India, set up a take registration in India and discharge taxes in India. Such other persons as may be notified. So everything in GST is through notifications and circulars. So anything later on needs to be added, then the government has the powers through this particular thing to notify any other class of persons who need to take mandatory registration irrespective of turnover. So these are the classes of persons who are required to mandatorily register under the GST law. Who are the persons not liable for registration? So looking at the scenarios of compulsory registration, we have a feeling that every other person needs to mandatorily will be somehow caught in some provisions of the GST law. But there is a Section 23 which is given, which says that certain kinds or categories of persons do not need to apply for registration, even if their turnover crosses 10, 20 lakh rupees or 40 lakh rupees, as the case may be. The first category is a person exclusively supplying goods or service that is wholly exempt from tax or not liable to tax. If a person is exclusively engaged in exempt supplies, then logically there is no point in that person registering, because if the person registers, there is no tax outflow at all, because whatever is the supplies which that person is making is totally exempt from tax. So in those cases, it has been said that they do not need to apply for mandatory registration because of Section 23's exemption given. Agriculturist, to the extent of supply of produce from land. So an agriculturist, say a farmer, whatever income they are generating from, say, the supply of, say, fruits and vegetables, because those are the produce from land, that will not be considered for the purposes of taking registration. Yes, you have to be very strict here, because only to the extent of supply of produce is given an exemption. So if the agriculturalist had any sort of other income, say rental income or commission income or any such income, then they have to mandatorily register depending upon whether 10, 20 lakh rupees has been crossed or not. Notified persons. So there is a list of categories of persons who have been given exemption from registration. That is, persons whose turnover is fully liable to tax under reverse charge basis. So, for example, say take lawyers. Lawyers are exempt from taking registration under the GST law. Why? Because whatever legal services is being obtained by business entities or by registered persons, the registered persons need to discharge tax on reverse charge basis, and it is not the lawyer who is liable to tax. So, when the lawyer's full turnover is to be taxed on a reverse charge basis, that is, his clients will be liable to pay tax on a reverse charge basis, it does not make sense for the lawyer to take registration, because there is no liability which he needs to discharge. In those cases, the lawyer is also exempted from registration. Similarly, take the case of goods transport agency service provider. A GTA service provider is again exempt from tax because their turnover is fully liable for tax under reverse charge basis. So when the liability is shifted from the supplier to the recipient, it is called reverse charge basis. And in those scenarios, again, a GTA service provider will not need to be registered. So these are the notified persons for whom registration is not required at all to be taken, irrespective of whether the turnover can be even in crores of rupees. Now we move on to prerequisites for taking registration. So we have looked at what are the aspects of taking registration under the GST law. What are the provisions? We've seen the threshold limits. We've seen the aggregate turnover requirements. Now we look at what are the documentation which you need to collect if you are going to now take up the assignment of taking registration for your clients. So that is what you need to first get all these basic details in hand from your particular client. So once you've decided that the person, looking at all the provisions, reading all the provisions together, you've decided that that person needs to register, you need to collect the PAN card, the mobile number, the email ID. The mobile number and the email ID, this has been the latest change in the GST regime, where they say that the mobile number and email ID should be the one that is linked to the PAN card. So that mobile number and email ID alone can be used for taking registration under the GST law. So can be cases you might find some difficulties in your client trying to understand which is the mobile number and email ID linked to the PAN card. That needs to be ascertained, and those details only need to be taken for applying for registration. Aadhaar number, which is mandatory, and the state or the union territory, you have to decide where all registration need to be taken. So depending upon whichever state you decide, in those particular states, you need to separately apply for registration. So each process, as the ground reality is that it's quite cumbersome today to get a registration done. A lot of our time is going to be involved in obtaining a registration. It is not as simple as it used to be in the erstwhile regime. A lot of information asked, a lot of follow-up to be done on the GST portal. And once the acknowledgement is generated, till the registration number is not getting allotted, we need to interact with department officials and also with the clients and try to get maximum information and clear out whatever other discrepancies pointed out. So in each and every state, separate applications will need to be made for registration. Temporary user ID will be generated, and you will have to start obtaining registration within 30 days of becoming liable. So now when is the time limit? When do you decide 10, 20 lakhs rupees is the limit? In a financial year, and once you decide that the limit has crossed, immediately within a period of 30 days, you need to initiate this process of registration. And again, today, also the reality is that to obtain registration, it takes around 30 working days very, very easily. Initially, it was 7 working days, but now there are some changes in the provisions, which it makes it now to 30 working days to take registration. So please inform your clients, and you also be very well prepared that this is not a one day's job of taking registration. In case if the example I gave you where I am going for participating in an exhibition in Bombay, based in Tamil Nadu, so I become a casual taxable person in the state of Maharashtra. So I also need to take a registration 5 days before the commencement of my business. So basically 5 days before the commencement of the event, I need to register as a casual taxable person and quote that particular GSTA number which I get, and I need to raise my invoices over there. It so happens that not many people are aware of this. So what they try to do is they just raise an IGST invoice, which in my view is not the right basis, because there are specific provisions available for in the name of casual taxable persons. And in the case of casual taxable persons, now in the case of, say, the example I gave you, I have to take a casual registration in the state of Maharashtra 5 days before my event begins. And at the time of taking registration, I need to pay advance tax. Okay, this is applicable only for casual taxable persons. I need to estimate what is the amount of sales I'm going to do at that exhibition and try to pay up that as advance tax at the time of registration itself. So that amount will be deposited in my electronic cash ledger. And once that is there, I at the end of my that particular month or the end of the exhibition, I'll have to report my outward supplies which I have made in the state of Maharashtra and set it off against the advance liability, advance amount which I had deposited, and set it off against the liability which I have, and file my return as a casual taxable person. So those provisions also you need to be very well aware of. So now, what is the procedure for registration given under Section 25? So the first step is to file GSTR REG 01. Lot of forms are prescribed for different activities in this particular registration module, where for every communication received from the department, every reply given by the taxable person to the department, there are specified forms given. So please ensure that you check these particular forms applicable and kindly provide your replies or your correspondence with the department only in those particular forms. And also ensure that the communication received from the department is in those particular forms which are being allotted in the GST law itself. So all this is as part of it is there as part of the rules itself. These forms are part of the GST law itself, right? So the department officials have to mandatorily follow these particular forms prescribed. So once you get any such communication, this form number, which is indicated in that communication, will give you an insight into what exactly and at which stage is your registration application now pending. So these forms are very, very important. You do not need to know all of them at the tip of your fingers. You can see as and when you take up such kind of assignments, you can always look at the forms which are prescribed along with the rules itself. That the CGST rules have these forms along with it. So yeah, first is the REG 01 Part A. So first, there are two parts to the REG 01, which is the registration form that you need to fill. Part A is very, very simple. You just need to give your PAN card, the mobile number and the email ID linked to your PAN card. And through that, an OTP will be generated in the mobile number and the email ID, which you are giving. And once that is done, you need to enter the OTP. And based on once that is completed, a temporary reference number is generated. So once that part is done, a temporary reference number gets generated. Using this temporary reference number, you now need to again log in. So once that is done, you take up the temporary reference number, an email will be sent to you in that particular email ID, saying that this is the temporary reference number allotted for this particular registration. Use that temporary reference number, go back to the GST portal, log in with the temporary number, enter the OTP which will come to your mobile phone. And once that is done, the Part B of the REG 01 gets activated. Part B is nothing but the detailed form of filing for registration. So in Part B, a lot of annexures need to be filled. A lot of tabs are there which needs to be complied with. I'll take you through each one of them right now. Once that is completed, you submit it with the help of a digital signature or with the help of a OTP linked to your Aadhaar card. That the OTP goes to that particular mobile number linked with the Aadhaar card. So OTP option also is given, as well as digital signature option is also given. Once you submit that, the GSTR REG02 is generated, which is the acknowledgement for filing of the application for registration. This REG02 acknowledgement number is what you need to keep handy and keep checking on the GST portal as to what is the status of that particular application you have made. Once you keep checking, there is an option available where you can go to the GST portal and say track status and put this the acknowledgement number of the REG02. It will tell you whether it is pending from the department side, and even it will now the latest update is that it even tells you which particular jurisdiction this particular application is pending for approval. So you, in case if you are able to track it down, you will be able to find out which officer is dealing with this registration, and you can follow up with the status on this application. Once you do that, this REG01 which you have filed, okay, REG02 is the acknowledgement of filing, but the REG01 is what you had filed on the GST portal, that gets moved to the proper officer. The proper officer, depending upon whatever jurisdiction you choose at the time of filing your REG01. So that proper officer will check all the details, and if found that all details are everything is okay, which on the reality side is a very I don't think that kind of a scenario really exists where the officer finds everything okay and the registration is approved. It always takes a lot of efforts to get registration. But in case if it is all okay, then the approval of registration will come within 7 days or 30 days. 7 days if the Aadhaar authentication is done, and 30 days if Aadhaar authentication is not done. So what is Aadhaar authentication? We will see in some time from now. In case if the officer is not happy with whatever documents you have uploaded, or it is not clear, or he has some clarifications to ask you, then that officer will issue you a show cause notice, which is in REG03, and he has to do so within 7 days. Once that is done, the assessee or the taxable person has to give a reply in REG04 to the proper officer. If after giving the reply, if the proper officer is okay, found the reply okay, and all his doubts have been clarified, then he will approve the registration within 7 days. If he's not happy or is not satisfied with the explanation given by you, then he will reject the registration application in REG05 within 7 days. So now you need to check whether after giving the reply, whether any communication has come from the proper officer with respect to the clarifications which you had submitted. If this application gets rejected, then you have no other option but to go and file a fresh application. Deemed registration. So like I said, there are a lot of forms which are involved. There is also a lot of time limits which have been prescribed. For each action which the taxable person has to do, or for the proper officer, there are a lot of timelines which have been given, which needs to be adhered to. Otherwise, the portal also will not accept, and the registration will automatically get cancelled. But there is a concept of deemed registration, where they say that if the proper officer does not take any action within a period of 7 days from the date of submission, or within a period of 30 days in case other authentication is not done, or after 7 days of submitting any clarifications, the GST portal will automatically grant registration to the taxable person. So this is a very welcome provision in the GST law, where it is not that you have to wait for eons together to understand what has happened to your registration. There are strict timelines mentioned, not only for the assessee, it is also for the proper officer. So if at all he misses to take out any action with respect to the application which you have filed, then the application will be automatic, and the GST portal itself will send out an email to you saying that you have been registered, and this is what is your GST registration number, and this is the login credentials. So this deemed registration is also available in the GST law. So once this process of getting registration is done, the registration certificate will be issued, which is the whole aim of getting and understanding and discussing these provisions, right? So the certificate of registration will be given in GST REG 06. This form is nothing but your registration certificate, and it will bear your GST number. Now, what is the GST numbers format? It is going to consist of a 15-digit code, out of which part of it is going to be a PAN card, and the first 2 digits will indicate the state in which the registration has been taken. So each and every state has been assigned a state code. Say, for example, Maharashtra or Tamil Nadu or any such state will have a state code. That code will be the first 2 digits, followed by the PAN card, followed by an entity code, and there's a checksum digit. So this is the format of a GST number, which is consisting of 15 digits. So like this, if the person is having multiple state operations, then they are going to have multiple GSTNs in each and every of these states. Yes, the PAN card will remain the same. The state code, entity code, and the checksum digit will keep changing. Very, very important thing to be done is once you obtain registration, the certificate of registration needs to be displayed in a prominent place in all places of business. So be it a godown, be it a warehouse, or be it the branch office, this particular certificate of registration needs to be displayed in all such places of business. Because if that is not done, there is a penalty of 25,000 rupees CGST and SGST, which can be levied just for not displaying the registration certificate. So please ensure that this is done as soon as the registration has been granted. So I was talking about Aadhaar-based authentication. I'm not going to get into it in detail because of the way the changes has happened recently. Initially, it was a very great thing because with Aadhaar-based authentication, I could get registration within 7 working days. In case my Aadhaar authentication for some technical reason it failed, or maybe I do not have an Aadhaar card, I've just applied for it, then I had the option of taking the longer duration, which is a 30-day time limit given to the proper officer to grant me registration after the physical verification of the premises. So if I wanted to avoid physical verification, I could go in for Aadhaar-based authentication. Right. So there were certain provisions given where they said these kind of people, these persons are mandatorily required to do Aadhaar authentication. That is authorized signatory of all types, managing partners, karta, directors, members of the managing committee in case of society, trust, AOP. Those people had to mandatorily do Aadhaar-based authentication. In fact, Aadhaar-based authentication has come in very recently. But even for people who have been registered ever since 2017, for the existing registrations, also Aadhaar-based authentication option is available. So it is not, there's as such, there is no time limit prescribed as such. But yes, that Aadhaar-based authentication for existing taxpayers also needs to be done. So in fact, today when you log in just generally, you will first pop-up comes for Aadhaar-based authentication. There's an option available for cancelling it and proceeding with your work. But as such, for existing taxpayers also, option is available, but as yet, no time limit has been specified. Now, in case you opt for Aadhaar-based authentication, that is during the process of registration, one of the tabs, there is an Aadhaar authentication required. And if you choose that as yes, then there's a list of formalities which need to be complied with. And after you do that, only your REG02 gets generated. So till such time, though you would have submitted the application on the portal, but if the Aadhaar authentication is not done, your application is not yet completed. So in case, had it been the old provisions of law, yes, this Aadhaar-based authentication would have to be done, only then your application process is completed. So what was the change that has happened is now, recently in 2023, it so happens that now this Aadhaar-based authentication has been restricted only for the state of Gujarat. It is not possible for assessees in any other states to opt for this Aadhaar-based authentication. So this is a pilot project which they're trying to undertake in the state of Gujarat for understanding this Aadhaar authentication. So because of this particular change, it so becomes now that all registrations in states apart from Gujarat will take 30 working days to be completed, and there will also be physical verification of the premises. That is, the officer does have the power to come for physical verification and also expect certain persons who are given as part of the application to be present over there. So in the presence of those persons, only a physical verification of the premises will be done. And they also have to upload that particular report, which they do after physically verifying the premises and then granting registration. So all this has been tweaked because of the menace of fake invoicing and fly-by-night operators, where people take registration all of a sudden, and when you actually go for physical verification, there is no such business which is existing in that particular place. So to arrest all these kind of problems, this Aadhaar based authentication has been introduced, and for now it is applicable only for the state of Gujarat. So these people, now what if you do not have Aadhaar? What if it's a person who's not registered or not a citizen of India? So for those kind of scenarios also, exemption has been given. So persons not a citizen of India, department of the government, even governments are required to register under GST if their turnover is crossing, right? So even if those kind of people, those people don't really need to do this Aadhaar-based authentication. A local authority, a statutory body, a PSU will not be required to take registration. Will not be required to do Aadhaar authentication. Once you have filed your application, you have also got the registration done. How will you do the amendment? So there is a section 28 which is prescribed. So if there is any change in any of the information that you have given, you need to report that change within 15 working days, and you have to make an application for amendment of the registration along with the documents relating to such change. So say, for example, if the place of business has been shifted, the office is shifted from another address to another address, you need to give a proof of that address, and you need to amend and inform the GST portal first thing within a period of 15 working days. And when such even there's a change in the constitution of business which is resulting in a fresh PAN card to be generated, then definitely you cannot go on for amendment. You'll have to apply for a new registration itself. And once you do an amendment in one particular state, that amendment will appear in all other states. So if in case say, for example, the principal place of business has been changed, then that will get reflected in all the other states. Say, for example, some directors have changed, some authorized signatory has changed, then that gets reflected across all the other registrations under the same PAN card. And in case your amendment is rejected, then it will be rejected under all the other acts also. So if your document supporting the amendment is not very clear, the proper officer has the power to even reject the amendment done. So there are separate set of forms prescribed here, which is RAG 03 for asking further information. If it is unsatisfactory, it is going to be rejected in RAG 05. And if they do not respond within the time limit, it will be deemed to be approved. So when you go to the GST portal, when you're doing amendments, there are two types. One is core fields and the other one is non-core fields. So core fields is something like, say, PAN card is being changed, or the status of the person is changing, or the managing partner name is being changed, the principal place of business is being changed. In those scenarios, there has to be a core field amendment. Core field means that once you change this, it will go to a proper officer for his further analysis and then approval. If it is a non-core field amendment, it will not go to the proper officer. Automatically, the GST portal itself will approve. So non-core is not something which is very major change. It can be some small changes which is being made to the registration application. In those cases, there will not be a core field amendment. It will be a non-core field amendment, which does not require the proper authorities' involvement at all. Cancellation of registration, again, two types. One is voluntary cancellation, and since just like you have voluntary registration, there's also voluntary cancellation possible. So say in case the business is being discontinued, there's change in the constitution of the business, or there is, I no longer cross the threshold limit of 10-20 lakh rupees. In those cases, I can go and voluntarily cancel my registration under section 29. The again form prescribed is REG 16. Within 30 days, I need to apply for cancellation. Until such time I do not apply for cancellation, I will have to follow all the legal provisions of the law, just as a normal registered person would do it. And the order of cancellation has to be granted to me, and it will come to me in form GST REG 19 within a period of 30 days. Now, the proper officer can also cancel my registration. It is not that only I have the powers. The proper officer, if they see or if they have reasons to believe that I am not doing genuine business, I am issuing fake invoices without supply of goods, I am taking in fake input tax credit, I have not filed my returns for 3 consecutive tax periods in case of composition taxpayers or 6 months in the case of normal taxpayers. I have been obtaining my registration by giving forged documents. In all those kind of scenarios, the proper officer can straight away go and cancel my registration. So the actual time limit is given that if I do not file my returns for 6 months as a normal taxpayer, then the officer can cancel it. But the ground reality is that even if the person has not filed, say, for even a single month, the proper officer is proceeding to cancel registrations for the reason that the returns have not been filed. So once the registration gets cancelled, it becomes very difficult for the person to do business because they cannot generate e-way bills. And in case e-invoice is applicable, even e-invoices cannot be raised. And the person who's filing returns for using his GSTIN, that is, his suppliers will not be able to use this GST number, because once they key in this GST number, which has got cancelled, it will show that this number does not exist. So in that case, the input tax credit will not flow to the GSTR 2A or 2B of this particular person whose registration has been cancelled. So try to avoid these scenarios where cancellation of registration can get activated. And now very great powers have been given under Section 29 to proper officer, where they say that even if there's a mismatch between GSTR 1 and GSTR 3B turnover, they can straight away cancel the registration. There is no threshold limit given, nothing. If my GSTR 1 turnover is higher and 3B turnover is lower, then they can straight away cancel my registration until and unless I do not pay up the differential liability. If I have taken ITC in input tax credit in violation of any of the provisions, if I have taken input tax credit in excess of what is reflecting in GSTR 2A, 2B, then also they have the power to cancel the application. So straight away, officers are, as of now, cancelling applications, cancelling registrations, and waiting for the taxable person to come forward and regularize whatever defects have been pointed out. So there is no show cause notice or anything which is being issued. Straight away, either cancellation or suspension is being done of registration. So in case cancellation of registration is to be done by a proper officer, notice is being issued in GST REG 17. Reply has to be given within 7 days in REG 18. Officer will pass cancellation order in REG 19 if it is not in favor. If reply is fine, then he will drop all the proceedings in REG 20. So till such time you have voluntarily applied for cancellation, or even if the proper officer has cancelled your registration, that does not mean that you will not be liable for any supplies which you undertake during that particular period. Frankly speaking, you're not supposed to take any such sort of a supply when your registration number itself has been cancelled. So once cancellation is done, you have to stop all business and get that registration first active. Only then taxable supplies can be made, and only then tax can be collected, and even invoices can be issued. So when any cancellation of registration happens, you have to be very, very careful, and very promptly you need to start taking action for this particular setting this particular right. So, for example, you have not replied, and still you're or say for reasons of the proper officer not accepting whatever reply you have given, they will still go and cancel the particular application. So where it has been cancelled, there is an option given for revoking the cancellation which is being done under Section 30. So what is the procedure given? Had you done a voluntary cancellation, definitely this revocation will not be required. But if the proper officer is going to cancel for, say, returns are not being filed, so in those cases, you can regularize by filing the pending returns and then applying for revocation of cancellation. The form prescribed is REG 21. You have to do that within 30 days from the date of order of cancellation. Then, if the proper officer is satisfied with it, then he will revoke the cancellation. That means he will allow you to be registered under the GST law within 30 working days by issuing REG 22. In case if the proper officer is not satisfied with the reply, he has to issue a notice in REG 23, and the reply has to be given within 7 working days in REG 24, And then if it is satisfied, he will revoke the cancellation, or otherwise he will reject the application in REG 05. So these forms you can decide as and when that particular need arises. But generally, this is what the procedure has to be followed for revoking the cancellation of registration. So before you file revocation of cancellation, you have to ensure that whatever has been the pending returns which are not yet filed up to the date of cancellation, you need to regularize that, pay off the return, pay off your liabilities wherever applicable with interest and late fee, and only then apply for revocation. You have to bear in mind here that the proper officer has the power to cancel your registration retrospectively. Say if my return has been filed only up to the month of December, I have not filed for Jan, Feb, and March. If the officer finds out today, he can cancel my registration with effect from 1st Jan 2023. If that be the case, then whatever has been my pending returns, I need to file it up and then apply for revocation of cancellation. And once the officer accepts my application for revocation and he activates my GST number, then say for example I get my number activated in May. So once I get my number activated, that means from Jan till May, I have not filed my GST returns. That I need to regularize within a period of 30 days after my number is being activated. So I need to quickly file all my pending returns. Otherwise, the officer has the power again to cancel my registration because I have not filed the returns within a period of 30 days after my number getting reactivated. So, and another point here is revocation can be applied only after Aadhaar authentication is done. So now this is not applicable only for the state of Gujarat. Only if registration at the time of registration, if you want to do Aadhaar authentication, that is only for the state of Gujarat. But in case you want to revoke your cancellation, you need to first get your Aadhaar authentication done and then apply for revocation of cancellation. And yes, there are some difficulties being faced because the Aadhaar number, the name as per Aadhaar card has to be very clearly brought out. And in fact, there were certain, in few months, there were the link for Aadhaar authentication was not being received. The OTP was not being received by the person who was trying to do the Aadhaar authentication. So these small technical difficulties are going to be a part and parcel. We need to see how we can work around that. But yes, you have to keep all these things in mind. There are other forms prescribed for taking registrations as other kinds of persons. So we saw in the section 24 where there were compulsory registrations required to be taken. So in case if I was a tax deductor, in the case of a government department, I might not be required to be registered generally as a normal taxpayer. But as a tax deductor, I need to take registration. Then I need to file REG 07. So long, whatever we have been discussing was REG 01. But like these registration application forms are different for depending upon the type of persons which are being applied. For extending the period of registration is REG 11, OIDA services REG 10. Now coming to the GST portal, the website, the URL we are all very well aware of, which is gstgov.in. Over there, you go to the services tab, open up, click new registration. Once you do click new registration, the basic details is being asked over here, which is whether you are a taxpayer, you're a tax deductor, you're a casual person, you're a non-resident person is what the first drop down is going to tell you. The state where you're taking registration, legal name, PAN card number, email address, and the mobile number has to be mentioned over here. Enter the CAPTCHA code and then proceed for submission. Once you proceed, whatever are the registration applications which are pending against that particular PAN card will be displayed over here. So here you can see the track and you can have a track of where all registration has been obtained by that particular PAN card holder. Once you do that, you proceed and the mobile OTP and the email OTP will come. This is nothing but the part A of REG 01 which you were discussing. Once that is entered, you will get a temporary reference number, which will be emailed to you as well as it will be displayed in your screen. Once you click proceed, then you have to use that TRN number and log into the GST portal to now start filling up the part B of your REG 01. So enter the temporary reference number, put the CAPTCHA code, proceed. There will be an OTP required to be given. And once you proceed that, enter that, the application form gets activated. So you click on the action, which is at the pen symbol over there. You click on that And this is nothing but your Part B of REG 01, which is your registration application. You can see that there are tabs for business details, promoter partner details, authorized signatory, authorized representative, principal place of business, additional place of business, goods and services which are going to be dealt with, state specific information, Aadhaar authentication, and then the final verification. So these each and every tab is quite self-explanatory. You need to fill it up, and in certain tabs there are certain requirements for uploading documents. So those documents I have just listed down over here. In the case of promoter partner tab, you need to put the photograph of the promoter or the partner. Authorized signatory, you need to give a proof of appointment of that person as an authorized signatory along with his photo. Principal place of business, you need to give the nature of ownership, the latest property tax receipt, the electricity card, the rental agreement, consent letter, and so on. And then you have bank accounts, so where you have to give the scanned copy of the bank passbook also, which needs to be filled up. So that an option is given to do it once after 45 days. Also, you can apply for bank account, because generally when a person is taking new registration, they might not have a bank account, because only once the GST registration is taken, the bank official will also give the open the bank account using this GST number. So the bank accounts can be filled up after 45 days of obtaining registration. But yes, if you miss to fill up this bank account details, your registration can be cancelled. So these documents is what you need to collect from your clients or the assessee so that you can apply for registration. A big hurdle which we face, a practical hurdle, is that these documents, whichever is being asked for, it has to be of a specific size. So there are size specifications given under each and every tab. So if it's a photo, it has to be, say, 100 KB or 200 KB alone. If it's going to be a rental agreement, there is a specific size given for that also. So that makes a job little cumbersome, because you need to ensure you have to keep compressing the files. There are tools available on the online where you can compress a particular PDF or the particular photograph file, and only then it gets attached in the application form. And just because it has been compressed to such a small size and it is being uploaded, the officer is not able to examine the contents of that particular application. So then we land up with a show cause notice saying that the contents are not clear. So then we need to proceed for giving the hard copies or giving the soft copies, emailing it or replying to the particular show cause notice which has been issued for this kind of clarifications. So yes, this is how the ground reality is working as of now. Because of the size restrictions, the files are not very, very clear for the officer to examine and get done with the registration. Then you come to the Aadhaar authentication. You click yes, and you choose a particular person who is going to do the Aadhaar authentication, and you click save and continue. And immediately there will be a link which would have come to the mobile number and email ID which has been linked to the Aadhaar card. That link has to be used. Click on that link, enter the OTP, and then your Aadhaar authentication has been completed. If you do not have that Aadhaar authentication, you can also upload the Aadhaar enrollment letter in this case. Once that is done, you fill up the verification tab, which is basic details, and you have the option of submitting with EVC, which is nothing but an OTP, or submitting with a DSC, and then the application gets submitted. Once that is submitted with the help of the OTP, you will get an email saying the application has been submitted, which is nothing but your REG 02, which you need to keep tracking for and finding out what is going to be the status of the registration application. So this is the first topic of registration which I have dealt with. Now I will move on to the concept, the second topic of on what value and when you should be paying, when you should raise an invoice and pay GST. I hope that my second presentation is clear to all of you. So here now we look at on what value and when you should pay GST. So having decided that registration is required to be taken, you've looked at the turnover limits and everything. Now you see on what value. Now on what value, it is not something which you and I can decide that, yes, okay, this is going to be the value of supply, let's discharge tax on that. Since GST is an ad valorem tax, that is, it is a percentage of the value of the supply. The valuation becomes very, very crucial, because the revenue for the government in terms of GST revenue is directly affected based on the valuation which the assessees do of that particular supply. these provisions become more crucial in cases where the valuation has to be done between two related persons. It is most likely that there is some sort of an influence on the particular supply. So I will not be actually paying tax on the actual value of the supply if I'm entering into a supply with a related person. So we're going to be discussing on how to value the supply, when and what documents should be issued, and when should the liability be discharged. So value of supply is given under section 15. So what section 15 says, there's only one section dealing with valuation. The reason, like I told you, for valuation becomes very crucial is because it is having a direct impact on the tax collections. What section 15 says is that I need to discharge tax at the transaction value. Now, what is transaction value? For that, transaction value has been defined as it is the price paid or payable between supplier and the recipient who are not related, and price is a sole consideration for the supplier. So transaction value is nothing but the open market value. Open market value is something where it is basically the concept of arm's length price, which we see in transfer pricing. So here you have to decide the transaction value by ensuring that there are no other factors which are influencing the pricing of that particular supply which you are doing. So the price which is paid for that supply between people who are not related, then that particular price is the transaction value. And you have to see that the price is the sole consideration for the supply. There cannot be something else which you're receiving in kind against this particular supply made. So maybe because of you're receiving some other modes of consideration, you will try to value this supply at a lower value. If that is the case, then this provisions of section 15.1 will be hampered. So consideration means any payment made or to be made, not only in money, even otherwise, that is even in kind. If I'm going to receive any consideration, then I have to decide that, and it will have an impact on my valuation. I have to include the value of that amount which I've received in kind also as part of my consideration to discharge the tax on that particular value. So when are the supplier and recipients not related? So this is very important. This has been given under section 15 as an explanation. In these particular scenarios, these persons will be considered as related parties. And once they are related parties, then whatever transaction value you determine, that will be incorrect. And you have to determine the transaction value based upon the rules which have been prescribed for valuation. So as long as the supplier and the recipient are not related, then you can follow the transaction value. As soon as they become related, 15 subsection 1 fails, and you need to go to 15 subsection 4, which says that the valuation has to be done as per the rules prescribed. So officers or directors of one another's business, partners in the business, employers, one of them directly, indirectly controls the other. So in all those cases, it will be considered as related party transactions. Valuation has to be done as per the specific rule prescribed for that. So what all values, what are the inclusions and the exclusions to the value of supply? Say, for example, if I'm making a supply of goods to you, that is, say, valued at 100 rupees. Now, a supplier and the recipient being you are unrelated. I will follow the 100 rupees as my value of supply. But for that 100 rupees supply, if, say, I have certain taxes or duties or any such fees or any charges which is levied under any other law, that also will have to be included in the 100 rupees. So 100 rupees plus any taxes, duties, cess charged under any other law for the time being in force, that will be added, say, 5 rupees. So my value of supply now becomes 105 rupees, and on that I need to discharge the tax. Say, for example, on your behalf, I've been paying the municipal taxes. In that case, the value of tax has to be added to the value of supply. Any amount that the supplier is liable to pay in relation to such supply, but has been incurred by the recipient and not included in the price. Say, for example, I am making a supply to you, but there is something which you have done on my behalf. So in that case, that value will also have to be added into my value of supply. So I cannot say just because I made a supply of, say, I am making some goods for you, but you have said that you have a very special mold or a die which you are going to give it to me, which through using that particular mold or die, I will supply goods to you. All right. So there is some sort of a consideration received from you, which initially I had to incur, but it has been provided by you. So the value of the mold or the die will also have to be included in the value of supply. Incidental expenses, commission, packing charges, transportation charges, any such incidental expenses will also have to be included in the value of supply. Interest or late fee for delayed payment of taxes or consideration will also be liable for addition. So say, for example, there's an invoice. If I say that if you do not make the payment for this particular invoice within a period of 1 month, that is 1 month is the credit period which is offered to you, there will be a simple interest of say 1% or 2%. So if the default happens, that is, if you do not pay to me within the period of 30 days, then that interest or late fee which is applicable, that also has to be included in the value of supply. So please note the invoices which are being used, because in that case, all those scenarios, the interest or the late fee will have to be followed. Subsidies directly linked to the price. So anything which is directly linked to the price will have to be added. If it is subsidies provided by the central government or the state government, that gets excluded. And if there are any discounts subject to certain conditions, that can also be reduced from the transaction value. So it is not that, okay, whatever is the value which we have agreed upon is going to be the transaction value. All these other items need to be considered and added to the value of supply. And there are certain exemptions, certain exclusions which are given, which is discount and TCS under the income tax law, which needs to be reduced from the value of supply. Now we're coming to discount. Discount can get reduced from the value of supply only based on certain specific conditions. There are two types of discounts, which is pre-sale discount and pre-supply discount and post-supply discount. If it is a pre-supply discount, that means before or at the time of the supply. Say, for example, I'm supplying something to you and I have very specifically told you that you will be eligible for a 10% discount. So this particular discount is known at the time of the supply, and I have specifically excluded discount on the invoice which I've issued to you. Then that can get reduced from the transaction value, and only on the balance I need to charge tax. So had it been 100 rupees, I give you a 10% discount. So I reduce 10% on the face of the invoice. On 90 rupees only, I need to charge tax to you and not on 100 rupees, because the discount is done before or at the time of such supply, and this is recorded on the invoice. What about post-sale discount? Say, for example, I give a discount if I get a prompt payments for you. Say that's something like a cash discount. So if you make payment within 15 days, you are eligible for a 2% discount. So this kind of a cash discount which is given, it is given after the supply has been effected. Yes, it has been known before the supply is being made, but it cannot be shown on the face of the invoice, because it is subject to you making payment within the prescribed period. So in those cases, I can reduce this cash discount from my taxable value only if I can establish it in terms of an agreement and specially linked to certain invoices, and the input tax credit attributable to the discount has been reversed by the recipient. So if I'm making a supply of 1,000 rupees to you and I tell you to make a payment within 1 month, you are eligible for, say, 10% discount again. So in that case, 900 rupees is going to be the value of the supply, because this discount is established in terms of an agreement. We are linking it to specific invoices, and you have reversed the input tax credit on the 100 rupees of discount which I had given initially. So discount has to be very, very carefully looked at, and not all types of discounts can get excluded from the transaction value. If you're not able to do valuation, especially in the case of where the supplier and the recipient are going to be related in some form or the other, as given under Section 15's explanation, you need to do valuation as per 15.4, and all these are the rules which have been prescribed. So in case if my consideration is not wholly in money, then how do I go about valuation? Between related persons, what is the valuation? If I'm doing through an agent, what is going to be the valuation? And then there are residual methods given for valuation. So say, for example, I have participated in an exchange offer. I bought a new phone in exchange for an old phone. So only the differential price I have paid. In that case, It is not that the transaction value is only equal to the differential price which I have paid. The value of the mobile phone which I have given in exchange for a new phone, the value of that mobile phone also, the old one, has to be included in the value of supply. That is why Rule 27 says if it is not wholly in money, generally you follow the open market value, which is nothing but the transaction value. If that is not available, then the value of the consideration in kind and the consideration in cash both needs to be added for finding out the value of the particular supply. If I'm not able to find out what is the value of the old phone to be given, then they have an option given of following the residual methods of valuation. Rule 28, especially in the case of related party transactions. Here you have to be very careful, not only related party transactions, even in the case of stock transfers. There was a burning issue initially in the GST regime when stock transfers were happening between related persons belonging to different states. So when I transfer stock from Tamil Nadu to Bangalore, to my branch in Bangalore, I need to do the valuation of that stock. Because if I value that, excuse me, sorry. So because of the stock transfers which is happening between Tamil Nadu and Bangalore, if I have to value it as normally I would have done to any third party, the amount of tax which I need to pay becomes very high for me. And the whole exercise seems to be a waste of time because I value it at the highest rate which I would have sold to some third party, and my Bangalore branch is going to take the input tax credit on that particular supply which I have done. So as such, it is a revenue neutral exercise from the government's point of view. So they say that if there are going to be transactions between related parties, you either go by open market value. If that is not available, then you will go by finding out the like, kind, and quality. Or if that is not available, follow the residual rules given. Another one is option 2, where they say that do not go by open market value. Don't try to find out what is similar supplies, how are they going to be priced. You have an option of charging 90% of the price charged for the supply of goods of like, kind, and quality by the recipient to his customer. Right? So when I'm supplying goods from Tamil Nadu to Bangalore, and from Bangalore it is being supplied to the end customers, the supply from Tamil Nadu to Bangalore can be valued at 90% of the price which the Bangalore customer, my Bangalore branch, is going to charge the Bangalore customer. Or what, in case input tax credit is available to both the parties, then whatever value we declare can be considered as the valuation, and accordingly tax has to be discharged. In case of agent, now the same options are given as in case of Rule 28. Residual rules of Rule 30 and Rule 31. Rule 30 is saying that if you're not able to do valuation by 27, 28, 29, Rule 30 says that you straightaway go by 110% of the cost of production or manufacture, or the cost of acquisition, or the 110% of the cost of provisioning of such services. So here again, there can be a disagreement between the department and the assessee, where how do you determine what is going to be included in the cost of production or the cost of provision of services can become a subject matter of dispute. So these rules are there, but very carefully you need to apply these rules of valuation. Rule 31 is the last rule, which says that whether you're not able to do even find out the cost of production, then you can go by using reasonable means consistent with the principles and the general provisions of Section 15. So these are the valuation rules of, in the case of valuation under GST. Now, Rule 33 talking about value of supply of services in case of pure agent. There are scenarios where we as chartered accountants also might come across this kind of a situation, where they say that if any expenses has been incurred as a pure agent, then that expenses can be reduced from the value of supply. But there are certain conditions which need to be made. And not one, but all the following conditions need to be satisfied. The supplier acts as a pure agent. The recipient receives a supply in his capacity as pure agents. The recipient of supply is liable to make payment to third party. The recipient of supply knows that the service shall be provided by the third party. It is separately indicated in the invoice, and the supplier recovers only such amount as has been paid to the third party, and services as pure agent are in addition to the supplier he provides on his own account. So say, it's very simply put, if I'm a chartered accountant and providing services of registration, or say some Ministry of Corporate Affairs, some registration, filling up some forms. So when I do that kind of a service, I'd say charge 1,000 rupees. Apart from the fee, what I charge, I'm also incurring expenditure on the MCS portal where I'm paying some fee for registration, or paying some fines or some penalty on behalf of my client. So when I know that thing, I am going to pay on his behalf, then that value, I can add it to my invoice, separately indicated on my invoice. Then I don't need to charge GST on that. It will not be included in my value of transaction, subject to these conditions being met. So it's like what I just explained to you. Corporate service firm A is engaged to handle the legal work pertaining to the incorporation of company B. Other than its service fees, A also recovers from B registration fee and approval fee for the name of the company paid to the ROC. So these kind of fees, which is paid on behalf of the incorporation of company B, that A is merely acting as a pure agent in the payment of those fees, because the invoice which is going to be given by MCA, that is also going to be in the name of the company B only. So it is very clear here that the corporate service firm A is providing services as a pure agent, and those expenses hence will not be included in the value of supply. Coming to invoicing. So when should you raise a tax invoice? Very, very important. These documents need to be very, very strictly maintained, because it has an impact on whether during the delivery of the goods, and also on whether input tax credit can be claimed by your customers. So in case if it's going to be a taxable supply, then a tax invoice needs to be raised at the time of removal of the goods itself. And in case there is no movement of goods at all, say for example, you're taking the items and going to the customer's place, and you are going to install that particular item, the particular machinery over there. In that case, there will be no movement of goods which is involved, because you're just taking all the parts and going to the customer's premises. In that case, at the time of delivery of those things, at the time of delivery, these particular tax invoice will need to be raised. In case of sale or return supplies, you have to take a tax invoice before or at the time of supply, or 6 months from the date of supply. So what is sale or return supplies? Is something like consignment sales, where I supply something to you, and to the extent of what is sold, you will sell it, and the balance you will return it back to me. So the time limit for you to return back the goods which are unsold is 6 months. If the 6 months time limit crosses, then even for the unsold stock, I will raise a tax invoice on you, because I have not got back those goods within the time prescribed. In the case of taxable services, they say within 30 days from the date of supply of services. So little relaxation given to services in the case of, unlike in the case of goods, because goods, they say as soon as the movement begins, it has to go under the cover of a tax invoice. But in the case of services, 30 days time from the date of provision of service has been given. Further relaxation given to banking and insurance assessees of 45 days. There's some concept called of continuous supply. So what if that the supply is recurring in nature? Month on month, a supply is going to be made. Then how do you determine when the document of tax invoice needs to be raised? If it is a continuous supply of goods, say for example, I'm supplying gas or petrol through a pipeline to you. In that case, it becomes very difficult to determine when the movement of goods is happening and when the termination of delivery has happened, and so on. For that case, of those kind of scenarios, it is called as continuous supply of goods. And in case if there's going to be, say, every month I will give you a statement of how much of gas or petrol I have supplied to you, then at the time of raising such kind of statements, I have to raise a tax invoice also. Or at the time of receiving successive payments from you, I will have to raise a tax invoice. So these are the scenarios for continuous supply of goods. Now coming to continuous supply of services, they say that if there is a contract which has been entered into and the due date is ascertainable from the contract, then the invoice has to be ascertained on such kind of date. Say, for example, I'm providing retainership support services to my clients. So in that, I have agreed upon that every quarter, I will raise an invoice for them. In that case, the since it has already been agreed in the agreement, in the contract, that I'll have to raise invoice on every quarterly basis, then on those particular quarter, I have to raise an invoice and not wait till the end of the term for the raising the final invoice. Due date is not ascertainable, then whenever payment has been received, that becomes the taxable point of services. In the case of, say, payment is linked to the completion of an event, then on or before the date of completion of the event, that kind of the invoice has to be raised. A simple example could be a real estate where you have been paying considerations to the developer for constructing of your flat. They say that when the first floor is being laid, when the second floor is being laid, you need to give the payments, right? So that is linked to the completion of some event. So the developer will have to raise an invoice at the time on or before of completion of such event. In case the contract gets terminated for some reason, then the date of such termination will be resulting in the requirement for raising an invoice, and the amount of services provided till such time the cessation has happened, that value has to be done, and that much value the invoice will have to be raised. What are the contents of a tax invoice? It is not some random information which you can put. There is a basic structure which has been prescribed in the GST law, that these fields are mandatory information which has to be mentioned on a tax invoice. As simple as a name, address, and a GSTIN of the supplier, and name, address, and GSTIN, if applicable, of the recipient. Date of issue, description, unit, quantity, value, place of supply, signature, HSN code, SAC code, all these contents have to be specifically mentioned. A very, very important aspect to note over here is, for a tax invoice, it has to be a consecutive serial number not exceeding 16 characters. So you cannot have any sort of special characters as part of your tax invoice number. It can only be a hyphen or a forward slash, which can be considered as special characters as part of your tax invoice series. So 16 characters, only consisting of these two special characters, and it should be consecutively numbered, because in case of any such cancellations and all that, you need to keep a track of having these kind of tax invoice series numbers. Then you have credit note and debit notes. So when a credit note and when a debit note has to be raised, I'm sure there's everyone who has come in touch with this concept of credit note and debit note gets confused as to what and when is credit note applicable and when is a debit note applicable. It's very, very simple. Always think of a credit note and a debit note from the perspective of the supplier. Who is the one who is supplying the goods or the one who is supplying the services? From his point of view, you look at the credit note and a debit note concept. So, say for example, I am a supplier who has supplied goods to you. And for some reason, I had charged 1,000 rupees, but I forgot to include the discount value as part of the invoice. You have also paid 1,000 rupees plus taxes to me. Now, for some reason, the taxable value or the tax which I have charged to you exceeds the taxable value or the tax that is actually payable, because a 10% discount was not given. So to the extent of 100 rupees, which is nothing but the 10% of your invoice, I will now raise a credit note to you to reverse that 100 rupees. So now my sales is not 1,000 rupees, it becomes 900 rupees because of issuing this credit note. So credit note always brings down the value of taxable value or the tax charged. In case I have supplied to you, you did not like the goods, you return it back to me, then I am the person who will issue a credit note to you, and you can later on purchase something using that particular credit note. Goods are found to be deficient, then also only I can issue a credit note. So these three are the specific scenarios given in the case of issuing a credit note. Now there's a small catch given in this particular section, which says that the credit note to be issued is on or before 30th November following the end of the financial year. So whatever supply I made to you of 1,000 rupees, for some reason you have forgotten to come to me and tell that the discount has not been given. And now it is past November month. In that case, I will not be able to issue a credit note to you because the time limit given to me to reverse and reduce my liability is crossed. So now I will say that I will reduce the 100 rupees and give you, but the tax portion I will not be able to reduce because I have to pay the tax on that particular my thing. So in those scenarios, I will not issue to you a credit note. There's something called as a financial credit note, which I will issue to you, which will not have the impact of any GST on it, but it will do the job of a credit note by reducing the value of the supply. So this has to be done on or before 30th November. Now, similarly, in the case of debit note, look at it from the point of a supplier. If I have given you extra discount, I had to, now I want to reverse that extra discount which I gave you. Then I cannot revise a tax invoice. I can only issue a debit note to you. So for the differential tax, or for the differential extra discount which I gave you, now I need to recover that amount from you. So I will issue a debit note to you and charge you that extra amount which you had not paid initially. So debit note increases the value of taxable value or the tax charged. So this debit note, there is no time limit because the government always wants the correct amount of tax paid to them. So had they put a time limit for even debit notes, then the government will lose out on that revenue initially, which was actually liable to be paid to them. So debit notes can pertain to any financial year. It can be still issued today and the differential can be collected. So credit note, debit notes are under the GST. Always look at it from the supplier's point of view and please note the restrictions given. These credit note, debit notes have to be very, very carefully used. And in fact, where there are invoices which are wrongly being issued, there is no option given to you to cancel the invoice or just tear away and throw that invoice. It is not possible because in the GST returns, you need to give the invoice-wise summary. How many invoices have you issued? How many credit notes? How many debit notes have you issued in the particular month? All those numbers, first invoice date, first invoice number and the last invoice number also has to be disclosed. So there's no way you can ignore certain invoices which you have issued just because you have issued them wrongly. So in those scenarios, you can take the help of credit notes and debit notes to alter the invoices which you have initially issued. There are other documents of bill of supply, receipt voucher, refund voucher, payment voucher, self-generated invoice, and delivery challan also. So bill of supply, only when there is an exempt supply, you will have to issue a bill of supply and not a tax invoice. So whenever you receive any invoices which is having the name bill of supply mentioned on it, it means that this particular supply is exempted and there will not be any tax that can be charged on a bill of supply. Receipt voucher is a voucher given in case when an advance is being collected. Refund voucher when an advance is being returned. Payment voucher is in combination with the receipt voucher. Self-generated invoice is when a transaction is liable for tax under reverse charge basis. So I gave you the example of a lawyer invoice and also a GTA service provider's invoice. So what the lawyer or the GTA service provider would do is they would just give you some sort of a basic invoice to you and tell you that the tax has to be paid under reverse charge. So corresponding to that invoice, you need to issue a self-generated invoice and charge the tax on that particular invoice and disclose those values in the GST returns. So that is why it is self-generated, because you are raising an invoice on yourself, on your behalf. Delivery challan, in case if the invoice the supply has to be undertaken without paying tax. Say you're just transferring the stock from one godown in a state to another godown in the same state. So as such, it is not considered as a supply because it is within the same state. But at the same time, you can't be raising an invoice because if the movement of goods happen without any invoice, the official on the road is going to catch that particular consignment and say that you have not raised invoices and you are doing all this without the cover of invoice. And he's going to confiscate those particular goods. So to safeguard in those scenarios, there is a document called as the delivery challan which you need to raise, which is very similar to a tax invoice. All the same contents need to be there. So delivery challan has to be issued, and then the movement of goods has to happen from one godown to another godown in the same state. So these are the other documents which have been mentioned. And now we come to e-invoice. A very welcome change, I would say, that the e-invoice has been brought into our country. In fact, this is not something which is there only in India. e-invoicing has been followed in across many countries wherever a GST or a VAT has been charged. So many countries are now implementing this, or those who have already implemented are going very aggressive by saying that even reducing the turnover limits so that all types of assessees get covered under this e-invoice requirement. So whatever provisions of invoicing is what we have seen. Apart from that, there is e-invoicing. That is, these documents continue to be issued. E-invoicing is nothing but just reporting these document details on the e-invoice portal. So once you report these document details on the e-invoice portal, there's something called as a QR code, which is being generated, or an IRN, that is an invoice reference number, which gets generated. And it's really quick. Within a blink of an eye, you can generate these IRN numbers from the e-invoice portal. That has to be mentioned on your invoice, and only then it becomes a valid invoice. So as of now, it had been on a very on a test basis. It has been introduced in our country in a very phased manner. So initially, it was only for certain threshold limits had been prescribed for introducing this e-invoice in our country. So basically, it is to avoid any changes which is being done on the invoice after the supply has been done. So what happens? I will do a supply of goods at say 100 rupees or 1000 rupees so that the goods safely reach the recipient's place. And later on, I modify the invoice. So he will have another copy. I would have had another copy of the invoice. So like this, a lot of disputes can arise. Then the communication is not the same with other business people, and also everyone is following their own formats for generating invoices. So to standardize to a great extent, this e-invoicing has to be introduced, and also to ease compliances. When I say ease compliances, it means that once I report these invoices on the e-invoice portal, automatically it gets auto-populated into my GSTR1 and also my customer's GSTR 2A or 2B. So to that extent, I do not have to really again enter all those details when I'm filing GSTR1. I can just check if the values are correct and I can straight away proceed for filing my GST return, because I can just the e-invoicing and the GST portal are in fact interlinked. So e-invoicing is nothing but just reporting the details. You continue to raise invoices as you have been regularly doing. Okay, it is applicable for, as of now, the limit has been given to 20 crore people. So the people who are having aggregate turnover exceeding 20 crores, not only in one financial year, in any of the financial years ever since 2017-18, even if in one particular year your turnover crosses 20 crores rupees, then you need to register for e-invoicing, even if currently your turnover is not 20 crore rupees. Certain sectors have been exempted, which is SEZ units, insurance, banking, GTA service providers, passenger transport service, and cinema theaters. So for all of these people, because largely it is B2C for them, they do not need to have this e-invoice applicability for them. So the limits are there. It started off with 500 crores in October 2020, and today we stand at 20 crores in October 2022. There was a talk of bringing this 10 crores to 5 crores, but there has been no such notification which has come into to our knowledge as yet. So the limit continues as 10 crore. And please bear in mind, it is not turnover, it is aggregate turnover as per the GST understanding. So you need to take into consideration even exempt supplies, exports, all and interstate stock transfers, all that will be taken into consideration for finding out whether the e-invoice limit is going to be applicable or not. And what are the documents covered? So once you say that you are your turnover is say 20 crore rupees, in those cases, e-invoicing will be applicable only for B2B or B2G transactions. B2B is business to business, B2G is business to government transactions, and export invoices. So only for these scenarios, you will have to raise an e-invoice. So what about B2C? For B2C, there is no such reporting which needs to be done unless you are 500 crores and above, for which another dynamic QR code needs to be mentioned. So as of now, if your turnover is only 20 crore rupees, for B2B, B2G export invoices, you report it to e-invoicing, generate the IRNs, mention that on your hard copy of your invoices, and only those hard copy invoices need to be given to your recipient. So tax invoices, debit notes, credit notes are the only documents covered. So if you are dealing with exempted turnover, so even if your total turnover is 20 crores, out of which say 10 crores is exempted turnover. For those 10 crores, you will be raising a bill of supply. So since bill of supply is not a specified document for e-invoicing, for that 10 crore limit of exempted turnover, you will not be raising any e-invoicing. For the balance 10 or 10 crores, which is the taxable supply, you will be raising e-invoicing for B2B, B2G or export supplies. So this is the e-invoice portal. There's a separate dedicated portal for that, which is einvoice1.gst.gov.in. Like this, there are going to be 10 such portals, but since it is being introduced in a phased manner, as of now, you have einvoice1.gst.gov.in, which is the portal given for raising and reporting all the e-invoice related information. The process is that you log in, create a login on the GST e-invoice portal, which is nothing but your e-waybill portal, or your GST login credentials itself will work over here. Activate your registration here. Upload the details. You don't have to really scan your invoices and send it and upload in the e-invoice. You just pick and choose the necessary information which is required to be uploaded, like your tax invoice number, the invoice value, the GSTN numbers, and so on. And once that is reported to the IRP will basically sign the invoice. Sign the invoice means, in the technical terms, means they're going to validate whatever information you have sent, and it'll give you back a QR code in the form of a JSON file. And that QR code is what you need to mention on your hard copy of the invoice. So that needs to be thing. And when you scan that particular QR code, it'll give you out all the information which is required in terms of the GST number, the details of the goods are sold, who's the seller. All that is comprised in that QR code, which is going to be pasted on the hard copy of the invoice. And once that is done, you can download that file of QR code. At the same time, the e-invoice portal goes on to report all this information to the GST portal for filing of GSTR 1. So this unique reference number, which is nothing but the IRN, is consisting of 64-digit code, which will come in the form of a 64-digit line item, or it can come in the form of a QR code also. Any one of them, you can place it on your invoice to make it a valid invoice. If you are liable for raising e-invoice and you don't do that, as such, your recipient is going to have a big hit on taking input tax credit on the invoice which you have raised, because you have not followed the e-invoice applicability. And because you have not followed the invoice applicability, the invoice which you actually issued as a normal course of in a routine manner, that will not be considered as a valid document. And once you do not have a valid document, the recipient will not be able to claim input tax credit on that particular document. So please be very sure that not only whether you have to comply with the invoice, even whether any of your recipients, whether any of your suppliers are liable to follow this e-invoicing, because only then whatever documents they issue to you, you will be able to claim credit on that. So always, I suggest you can take a declaration from your suppliers to say that the e-invoicing provisions are not applicable to them. You can take a declaration from them and keep it for your records. Until and unless then, please check with your suppliers whether e-invoicing is being followed by them or not. So this is what I was referring to as your e-invoice, where you have a small QR code on the right side, and this IRN number is going to be given over here. So this is the normal contents of a tax invoice which you would have raised. It's just that an IRN number and a QR code is being additionally mentioned on the e-invoice. So this is what is called as an e-invoice. So I think these are my submissions on valuation, invoicing, as well as the registration, cancellation, revocation provisions of the GST law. If there are any questions, I will take them up now.
So we have first question from Jyot Shukla. Her question is, reimbursement of amount on pure agent basis is to be included to check aggregate turnover.
Yes, that will be considered as part of your aggregate turnover.
Our second question is, the PPT was available after the session is over.
Yes, I've already shared it with the organizers.
We have so many questions, but because of time constraint, we will conclude our session over here. I would like to express our sincere appreciation to esteemed speaker for taking time and giving the knowledge regarding issue of registration of GST invoices in payment. Those questions which are unanswered will be answered through email. So thank you everyone and have a great day.
Thank you so much for all the participants and the organizers for giving me this opportunity to share my thoughts on this particular issue. Thank you so much.